Hi guys, our topic for today is adjusting entries. So, what is adjusting entries? Adjusting entries are journal entries which are to be recorded in the general journal and are usually prepared at the end of an accounting period of 1 year following the preparation of a trial balance. What it means, the revenues are being reported or na-rendered sa company and also the expenses na nagamit na sa companies. So it was made during the accounting period. It is also depends from the company. It is either a monthly, every 6 months, or yearly. It is made before the books are closed for the period and financial statement is issued. There are 6 types of adjusting entries. The first one is accruals, and there are 2 parts of accruals, which is accrued income and accrued expenses. The second one is deferrals, and it has 2 parts: the pre-collection of income and prepayment of expenses. And the third one is provision for depreciation of property and equipment for fixed assets. Fourth is provision for estimated uncollectible accounts, which is bad debts. Fifth is adjustment on inventories. This is typical in merchandising and manufacturing concerns. Sixth is correction of erroneous journal entries. Okay, so let's proceed to accruals. Accruals, it means that these are the revenues of the company wherein they have already rendered their service or the products have been delivered of the customer pero wala pa na-receive ang payment. And also, these are the expenses of the company wherein nagamit na sa company pero wala pa nabayaran. So, let's start with accruals. First is the accrued income. So, accrued income is an income that is already earned but not yet collected when the accounting period ends. So, it means gitrabaho na sa company ang dapat itrabaho sa isa ka customer pero wala pa nabayaran. So, the adjusting entry is the debit will always be receivable and then credit is always income. The second one is accrued expense. Accrued expenses, it is an expense that is already incurred but not yet paid when the accounting period ends. It is also known as accrued liability because this is the expenses of the company wherein nagamit na nila pero wala pa pud nabayaran. So the adjusting entry, since it is an expense and wa pa nabayaran, i-debit ang expense and payable is credit. So the second type of adjusting entry is deferrals. Deferrals are a type of adjusting entry in a company's general ledger that delays the recognition of a transaction in the company's accounting records until a future fiscal period or periods. So this is the opposite of accruals. The company has an advance payment to the customer but the company has not yet rendered the service. So wala pa na trabaho and dapat buhaton sa customer or the product is not yet delivered from the customer. And under for deferrals as pre-collected income. So pre-collected income, it is an income that is already collected but not yet earned. So this is exactly also the opposite of accrued income. So let's proceed. There are 2 methods of pre-collected income. The first one is income method. It is an income account is credited upon collection or receipt of cash. This method is also called nominal approach because an income is an income statement account and income statement accounts are also called nominal accounts. The second one is liability method. A liability account is credited upon collection or receipt of cash. This method is also called real approach because a liability is a balance sheet account and balance sheet accounts are also called real accounts. Prepayment of expenses. It is also under from deferral, which is the prepaid expenses. This is an expense that is already paid but not incurred. This is exactly the opposite of accrued expenses. So this is the expenses from the company to be paid in advance but di pa na fully used ang nabayaran. So there are 2 methods of a prepaid expense. First is the expense method. Under this method or approach, an expense account is debited upon payment of the prepaid expense. So the journal entry for that is the debit is expense and credit is cash. This is to record the payment. And the adjusting entry is you'll have to debit the prepaid expense and credit for the expense. So you have to record the unused portion. The second method of prepaid expense is the asset method. Asset method is an asset account debited upon payment of the prepaid expense. So the journal entry for asset method, prepaid expense is debit and credit is cash. It is to record the payment. So the adjusting entry, the debit is expense and credit is prepaid expense. This is to record the used portion.